What's up everybody, welcome to the channel. Soil here, and today I want to teach you a 1-minute scalping trading strategy which has a very high degree of accuracy. It's a very simple trading strategy, but for running it successfully and make profit with this scalping strategy, you need to consider some important points which I'll explain all of them throughout this video. Make sure you watch this video until the end so you don't miss any point. Without wasting any more time, let's get started. Alright, as I said, this is a 1-minute scalping trading strategy, so here the time frame of the chart should be on 1 minute. This is the price chart of Bitcoin, but you can also run this strategy on any other asset, whether it's crypto, Forex, or stocks. The only requirement is that the asset must have high level of trading volume and liquidity on your exchange or broker, because we are working on a very low time frame and we don't want to see any slippage or insufficient order book which can cause unreal price gaps that can damage our trade entry, stop loss, or take profit orders. In this trading strategy, we have 3 indicators, 2 MACD and 1 stochastic oscillator. For adding indicators to our chart, here we click on indicators and we simply search the name. The first one is stochastic oscillator, this one, and we must change its settings. Here for its K% length we set 7, for K% smoothing we set it at 3, and for D% smoothing 3 is fine. The next indicator we want to add is MACD, this one. And for this MACD, we must also change the settings. For the fast length, we set it at 13. And for the slow length, we set it at 21. We don't change anything else here in this tab, and in the style tab, we unselect MACD line and signal line, because in this strategy, we only need the histogram. We must add another MACD to our chart. And in its settings, in this tab, for the fast length, we set it at 34, and for the slow length, we set it at 144. Everything else in this tab is fine, and we go to Style tab, and similarly, we unselect MACD and Signal. Because as I said, in this scalping strategy, we only need to work with the histograms. Everything is already set on the chart, and before we start the strategy, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, now let's see how we trade based on this scalping strategy. We use this MACD, the MACD with the length values of 34 and 144, for identifying the short-term direction of the market. When this MACD histogram is red, the trend direction is down, and when this MACD histogram is green, the trend direction is up. This is a trend following trading strategy, meaning that we enter in the direction of the trend. So we need to identify pullbacks so we can enter in the direction of the market. For identifying the pullbacks, we use this MACD, the MACD with the values of 13 and 21 for the length. When this MACD is red, which means we are in a downtrend, then on this MACD, we must look for these green waves. When these green waves happen while this MACD is red, this means a pullback is happening. And the result could be just a pullback and then the price continues the downtrend direction, or it can be the starting point of a new trend. As you can see, after this green wave, this MACD turned green, showing an uptrend in the market. Alright, now you may wonder how to know when we should enter on these green waves. For this purpose, we use the stochastic oscillator. If the K% line in the stochastic oscillator, the blue line, is above 80 and then crosses below the D% line, it gives us the signal to enter a short position. So this MACD is red. We got a green wave on this MACD while this MACD is red. The stochastic K% line is above 80 and then crosses below the D% line. This is a signal for opening a short position. So we enter a short position here at this point. The stop loss for this trade should be placed above the highest high here at this point, so we set our stop loss here. And for the profit target, we take our profit when on this MACD we get 2 consecutive bars with light red color. So we take our profit here at this point. We set our profit target at this point. Moving on the chart, this MACD is still red. Here we got another green wave. The stochastic K% line is above 80 and then crosses below the D% line here at this point, which gives us the signal to open a short position here at this point. So here again, we can open a short position with the stop loss placed above the highest high here at this point. And for the profit target, we take our profit when on this MACD, we get two consecutive bars with the color of light red here. So we take our profit here at this point. We set profit target here. Again, here another green wave while this MACD is still red. The stochastic K% line is above 80 and then crosses below the D% line, giving us a signal for opening a short position here. So we can enter another short position here at this point. Similarly, the stop loss is placed above the highest high here at this point. And for the profit target, similarly, when on this MACD, we get two consecutive bars with the color light red. Would be actually on this point here, which doesn't provide a very good risk to reward ratio. It's still acceptable 1.6. Again, another green wave while this MACD is red. Stochastic K% line went above 80 and then crosses below the D% line, giving us another signal for opening a short position. So here again, we can enter another short position with the stop loss placed above the highest high in this area. And the profit target when we get two consecutive bars on this MACD with the color light red, which is here at this point. So we take the profit of this trade at this point. And when this MACD is green, which shows we are in an uptrend, then on this MACD, we must look for these red waves. When these red waves happen while this MACD is green, it means a pullback is happening. And then we take a look at the stochastic oscillator for identifying trade entries. When the K% line of the stochastic oscillator is below 20 and then crosses above the D% line, it gives us the buy signal or opening a long position. So here, this MACD is green. On this MACD, we got a red wave indicating that a pullback is happening. Then the stochastic K% line went below 20 and then crossed above the D% line, which gives us the signal to open a long position here at this point, starting of this candle. So we can open a long position here with the stop loss placed below the lowest low in this area. And for the profit target, we take our profit when on this MACD, we get two consecutive bars with light green color, which happened here. So the profit target should be taken at the end of this candle. Not a good one, risk to reward ratio of less than 1, but still didn't make any loss. Moving on the chart, this MACD is still green, and this MACD started giving us the red wave, but not any signal from the stochastic oscillator. And here at this point, the stochastic K% line is below 20, and here crosses above the D% line, which gives us to open a long position here at this point. So we can open another long position here with the stop loss placed below the lowest low in this area, and profit target when we get two consecutive light green bars on this MACD histogram, which happened here. So for this trade, we should take our profit here at this point. Please pay attention that sometimes the pullback or correction is so deep that in the time that when the stochastic oscillator gives us the signal, on this MACD, we may see a very slight shift in the color, like what happened here, which was actually after the signal, or another small single bar here, which we can ignore it and show flexibility on it. Another important point that you must pay attention to it is that this is a trend following trading strategy. So it works well when the market is trending, and it doesn't work well when the market is flat and actually not trending. And this is when this MACD constantly changes color. So it's a good idea after an established period of trend, when this MACD changes color, give it a little time and see if it develops well in that direction or not. Along with this, you must also keep watching the price action. When you see the market is clearly flat, so you must stop trading until a trend starts and develops. And the most important aspect of this strategy that you must do is risk management. I explained how you must set the stop loss and profit target, but you must also define the amount of loss on each trade. This is a scalping trading strategy on 1 minute time frame, and you're going to trade actively in a day. You may have 20 tradings in a single day, and if you don't control how much you're going to lose, you will blow up your trading account faster than what you think. Losing trades are part of the game, and winning every single trade is impossible in reality. So besides setting stop loss to prevent unexpected losses, we need also define how much we're going to exactly lose on each trade if the market goes against us. There is a risk management strategy for active trading which is called 1% rule, and by the help of this strategy you only lose 1% of your trading account on each trade if the market goes against you. I explain it very shortly here because I have a complete guide to this strategy. The link is also in the description of this video, and I highly recommend you to watch it later because it's really important to manage your risk properly. Getting back to our strategy, as I said, we're going to lose 1% of our trading account on each trade in case if the market goes against us. Consider we have a $10,000 trading account, and on each trade we want to lose 1% of this, so that would be $100. Consider we want to enter a long position on Bitcoin at $30,000 and we want to set up the stop loss on 29,000 for example. So here the maximum loss per coin is $1,000. Now we divide our defined maximum loss amount, which is $100, 1% of our trading account, to the maximum loss per coin, which for this trade is $1,000. The result is 0.1, which is the amount of Bitcoin that we must buy. So we buy Bitcoin worth of $3,000, nearly 1/3 of our trading account, but without any worry, because if the price goes against our position, we only lose $100, only 1% of our trading account. I recommend you to watch my video on this, which there I explain everything in more details and more examples, so you will better understand the whole concept of this risk management strategy. The link is in the description, and it's highly recommended to watch if you're not familiar with this, because without this 1% risk management strategy, you cannot achieve success and consistent profit with the scalping strategy I explained in this video. Not only for this strategy, but in any other trading strategy, you must have a proper risk management strategy, and that's the vital key to your success. Please pay attention. If you're a beginner or you don't have much trading experiences, you shouldn't try this scalping trading strategy with real money. Scalping is not recommended for beginners because of the higher degree of risk in compared to other types of trading. Successfully scalping demands a well-developed psychology of trading and controlling emotions because of the high number of trades per day and the ability to manage them effectively. So if you're not an experienced trader, I highly recommend you to practice as much as you can and start with real money only if you're consistently profitable in paper trading. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.